And look, right now, your home is being squeezed from two completely different directions. First, there's the loud squeeze that everyone is talking about, your exploding insurance premium. But while you're distracted by that, they've launched a quiet squeeze, a new wave of state laws like one that just passed in Texas that literally bans your right to vote on new development. Your local control, it's gone. But wait, what does your insurance bill have to do with the zoning law in Texas? It turns out that they are a coordinated two-front assault. And the target is the $11 trillion in equity locked inside your home. First, let's talk about the financial pressure side of this attack. And this is the loud villain. The story you think is happening is this. Oh no, more wildfires, more hurricanes. The insurance companies, they're scared. And yes, that's part of it, but it's also a fantastic excuse. It's designed to make you panic. And while you're panicking, 34 states plus DC have helpfully rolled out FAIR plans. A FAIR plan is the state-run insurer of last resort that you're forced onto when no private company will cover you. They were supposed to be temporary safety nets, but they're not temporary. California's FAIR plan has grown over 200% since 2019. Louisiana's went from 35,000 policies to over 128,000. It is now literally one of the largest insurers in the entire state. It's like the Roach Motel of insurance. Homeowners, they check in, but they can't check out. And it gets even worse. These plans are, to use a technical term, hot garbage. Colorado just launched theirs. And guess how many people signed up in the first few months? Go ahead, guess. 51. Because their own website warns it's the most expensive way to insure a property. And it only covers actual cash value. That means if your $300,000 home burns down, you might get $150,000. It's like buying a life preserver that's just a laminated photograph of a boat. It's unhelpful. So you're being dropped by your normal insurer, forced onto an expensive, useless government plan. And while you're distracted by all of this, they are quietly passing the real bills, the legal infrastructure, the quiet squeeze. This is the part they don't want you to see. While you're on hold with Allstate, this is what's happening in your state house. Welcome to Texas, right? In 2025, they just passed a 3-course meal of corporate dominance. First, SB 840 and SB 15. These two Senate bills prohibit cities from stopping high-density development. No public comment, no more community votes, your local control, it's all gone. Second, SB 458. This one mandates binding appraisal for insurance disputes. It removes your automatic right to court. Your insurance company can now unilaterally replace a jury trial with industry insiders. That's not a trial. That's a performance review where you're the one getting fired. And third, SB 17. It's pitched as banning foreign ownership, and that's fine, but to do it, it requires a comprehensive centralized state-level database to vet, track, and monitor every single property transaction. So do you see the pattern here? They are forcing you into financial distress with one hand while systematically removing your legal power to fight back with the other. They've got you boxed in. It's like being mugged by two people, and one of them is your HOA president, and the other is just an Excel spreadsheet with googly eyes. It's baffling. Wait, why are they doing this? Because of this, $11 trillion in tappable home equity. That's your nest egg, and right now, you're sitting on it. Homeowners are extracting equity at less than half the normal rate. They don't like that. But the Mortgage Bankers Association did report one surge: debt consolidation. Homeowners have shifted from using equity for renovations, down from 65% to 46%, to debt consolidation, up from 25% to 39%. That's not a coincidence. They are not inviting you to tap your equity for a new kitchen. No, they are forcing you to liquidate it just to pay the bills that they created. And now the sharks are circling. The CFPB just issued a massive warning about home equity contracts, products where you get 40% of your home's value in exchange for 70% of its future value. It's a loan shark in a Patagonia vest. I mean, if you have debts you want to consolidate with 0% money, really good money, check out loopholelending.com. So how do you possibly protect yourself from this coordinated multi-front assault? Well, okay, we'll put it all together. Loop 1, the insurance crisis is the financial pressure, the loud squeeze, the one that's in your face, the one that everyone's talking about. They use black box algorithms, which Colorado just admitted are trade secrets that you can't even see, to non-renew you and force you onto broken fare plans. How many people are being dropped? Well, Florida's non-renewal rate hit 3.35%, California 3.18%, Arizona 2.97%. These aren't accidents, they're systematic. 20% of Florida homeowners have just dropped their coverage entirely. They said, screw it. Now, loop 2, the zoning crackdown, exemplified by Texas, is the legal trap, the quiet squeeze. What's happening while you're worried about other things, like life? They're devaluing your local control, turning your neighborhood into an administrative decision that you've got no say in. The squeeze meets the trap to force the extraction. And then, check this out. Florida, the state with the worst insurance issues, the state where 20% of homeowners have just dropped their coverage entirely, also saw its homeowners' equity decrease by an average of $32,100 last year, while homeowners in New Jersey and Rhode Island saw theirs increase by $36,000. The system is working perfectly. It is draining the equity exactly as designed. And this crackdown is not only happening in Florida and Texas, it's happening in California and Arizona too. And it's in development in Utah, Oregon, Nevada, and Montana. It's just a matter of time before it reaches your state. So what is your defensive playbook? It's not shop for more insurance. No, that's what they want you to do. For now, there are two big actions that you can take. One, legal fortification. This is an asset protection game now. Join your HOA and strengthen your covenants that restrict density. Private agreements often survive state preemption. And start looking into irrevocable trust structures. You can find some good options at protectmyhome.inc. 2, proactive equity. Tap your equity now on your terms. Get a home equity line of credit, even if you don't need it. It locks in your access before an algorithm decides you're suddenly too high risk to borrow against your own damn house. I send my friends and family to ridgelendinggroup.com for this. But don't let them be the ones who decide when and how you use your wealth, because that's the real lesson here. This two-front assault, this whole system, it's not broken, it's rigged. And it's working exactly how they want it to. The beta test, it's over. The real deal has rolled out in Florida, Texas, and Arizona, and it's coming for your state too. So the question isn't just how do you protect your equity though? The real question is, how does the middle class win a game that's rigged against them? It turns out there is a playbook for that. And I've pulled that video out for you right here to watch next. They are counting on you being distracted, and they're winning that game. Don't give them the satisfaction. Click this video right here and I'll see you over there.